April 29, 2019. It's a Monday. It's a new week filled with some amazing opportunities. Guys, here's what we observed on Friday. The bull show keeps going on Friday, but what we're seeing is the bears can finally take over this market today. Despite of the strong GDP number that would typically produce a huge sell-off, and for those that may have a difficulty following for this rationale, generally, good or great GDP number does not equate to markets going higher because it really prompts the Federal Reserve to raise the interest rates. If you keep getting good positive data, such as strong GDP, strong job numbers, that gets the thinking of the Federal Reserve to get on track with raising interest rates. So generally speaking, over the course of the last couple of years, if we did see strong data on those days, the market actually was dropping. We got a completely reverse effect. This time, the market actually went higher Friday. Now, it does not mean that this bull is going to be very sustainable. As a matter of fact, I remember one particular instance in the last couple of years where the market did go higher on strong GDP number to the magnitude of 350 points, just to drop in the next 48 hours by 500 points. So today is a great test for the market. Is this bullish blind behavior from Friday, is it really going to sustain today? That is what we're going to be watching. There's some clear signs that I'm going to cover in a separate video that resembles this market conditions that we're seeing in the market right now to those of 1987, just a few months prior to the big crash. Now, the Amazon reaction has been puzzling as well because in growth stocks, what investors are looking for is future growth and margin expansion. Now, Amazon has actually projected neither moving forward. So the initial reaction, Amazon was dropping to 1900, finished the day strongly at 1949. So far today, pre-market on April 29th, on Monday, there is not any significant follow-through that we're observing. Last time I checked, Amazon was basically in the range between 1948 and 1952 on very low volume, about 14,000 shares, which is very insignificant, which signals there's going to be a possibly not a big move, and the market could be rethinking what they have done with the market in general and Amazon shares as well. What Amazon specifically said, it is going to invest more money, and the margins are going to be impacted negatively due to that. So for longer term investors, maybe no big deal, but definitely going into next few quarters, that's going to impact the earnings per share. So what we're observing typically with the growth stocks, anytime there's any margin pressures, the stocks typically will react negatively, and that was the initial reaction. However, where Amazon closed for the day, even though $40 move higher is not a significant move for Amazon historically right after earnings, it does signify that some investors are still willing to commit capital here regardless of what's happening in the current market or regardless of whether Amazon earnings are going to fall over the next few quarters. And it may be so just because we're in an environment where all the stocks are pretty much trading at their all-time highs, and maybe they're just searching somewhere, someplace to invest their money because there's just simply a lack of better alternatives out there. So when banks buy stocks on what appears to be a good current quarter, it's really contradictory because typically they buy stocks based on what's coming next. And Amazon made it pretty clear that for the next few quarters, the picture may not be as rosy as the one they just announced. Some of the top trades to consider today are Spotify, Boeing, BABA. We're focusing on Google after hours. Notice, guys, we're not buying any Google calls or puts before the earnings. We're waiting until Google is actually going to announce earnings. And, of course, Tesla, it's unwinding in a really strong volume. So let's take a closer look, guys. The top 3 shorts that we are considering for today. Number 1 is Tesla. We recommend shorting this thing on any bounce. 187.5 target. Look, so far pre-market it's trading around 238 at the moment I'm recording this. So it actually closed at 234, 235 on Friday. It's making a bounce. That would be a desirable area to come in. I'm not sure exactly where it's going to open. I mean, it could open at 240, could open at 236. But ideally, wait on a small bounce because this thing is definitely heading lower based on the chart. So it's an easy trade if you just stay with it and buy it in the money. Here's the significance. Let me point this on the chart for you guys. On the daily chart, this strong volume consecutively day after day has not happened in a while. As a matter of fact, if you combine the volume in the last couple of days in Tesla, we don't have such an instance going back over last 6 months. We actually don't have such an instance going back, last couple of years. All the indicators are incredibly bearish, but what makes this significant is the fact that, just as we pointed out in a video about a month ago, that Tesla is about to do something it has not done in 2 years, and specifically what it is, it's breaking below this 250 level, which has been a critical level of support. Now that it's breaking this level, notice it's not breaking this level on a small volume, it's breaking this level on increasing volume, which could propel drastic drops further. Now, trading Tesla stock over the years is a really strong level of support right around 210 level and right around 187.5. We take a look at the weekly chart. For those of you that are trying to apply your knowledge from the market divergency scores and the chart patterns, you can clearly see that long time frame, Tesla has failed out and created this multi-top formation pointed out by these blue dots. It also has consistently confirmed the divergency on the RSI. As you can see, every time the stock moved higher, the RSI kept moving lower. It's also heading into a death cross formation. As you can see, the blue line and the orange line are getting closer and closer each day. On multiple time charts frames, as you see, this is a weekly chart and we're just looking at the daily, the same signals are confirmed. We're getting a huge volume increase on the sell side. We're getting clear signs that institutions are running for the exit out of this stock. The MACD is also bearish on multiple time frames. And if you were to examine what was Tesla trading at before 2017, you will find these support levels that I'm discussing here, which are 210 and 187. So the question is, I think what we're about to witness over the next 30 days, so we'll have Tesla drop all the way to 187.5, followed by a bounce, maybe back to this 200, 210 level. Number 2, short China. We've identified the divergency that good economic data is not committing investors in China. All the Chinese sectors are pointing to the fact that institutional investors do not want to buy them at these levels. If they're not wanting to buy them, we're seeing some signs, just like with Tesla, where these stocks are at the multi-month highs, but they're very hesitant to move higher. And that's considering the great catalyst that the Chinese economy is supposedly improving based on the economic data that we see in the news. So at this point, we're calling for a BABA top around these levels of 188, 191, and a very easy trade would be to just simply buy the 190 puts. Here's a detailed look at the BABA chart. You can clearly see as the price trending around these 187, 190 levels, the RSI continues to diminish. So the strength of the stock is dropping even though there's some good catalyst for the stock to keep moving higher. It is also confirmed on the volume that on the up days, the volume is not significant. The MACD is bearish, and yet so many people bought the stock and accumulated from these December lows all the way from 135 to 190 now. It would be reasonable to expect a pullback back to the 170s. So 190 puts, we're expecting this trade to play out over the course of the next few weeks. Short Boeing. Guys, charts point to a $30, $40 drop in Boeing over the next 2 weeks. And I don't have the chart. Forgot to insert it here in the slides. But if you were to pull up the 1 day, 1 minute chart, what you will notice in Boeing is a really nice bearish pattern. On one side, you'll see a resemblance of a head and shoulders on a longer time frame. And on the other side, recently when it made the gap down, at this point it tried to close this gap twice and it has failed. In the prior 13 market moves daily video, we have posted that ideally we want to wait to short Boeing if and when it bounces back to the 190, 195 level. Well, in this case, we don't think it's going to happen anymore. So the current levels on Boeing of about 380, 385 is a good area to come in and simply get 180, 190 puts that are expiring in the next couple of weeks. And you can mix it up. You can buy some Boeing puts that expire this week. And ideally, again, because VIX is so low, you still want to buy these in the money, like the 390, 380 range. And buy part of the position with the puts that would be expiring the following week. So if you're looking to invest maybe a couple of $1,000 into this trade, spend $1,000 committing to the put options for this week and $1,000 committed to the put options for the next week. And the fourth sector that we're actually very bearish on is the semis. And so stocks like AMD, they are reporting tomorrow. We've been showing recently on the chart some weakness in some of the best semiconductor stocks like AVGO, NVIDIA, and LRCX actually is the correct way to spell the sticker. So sector pullback is coming, guys. A lot of these stocks are showing some signs of exhaustion, but the analysts still remain extremely bullish, which is a nice setup because while they're still talking the stocks up higher, what they're really doing is they're slowly pulling the money out of these things, and we can clearly observe that on the charts already. Now, it does not guarantee that all the semiconductor stocks will drop like a rock today, but that's going to be the overall trend going into over the next 30 to 60 days. So if you're considering shorting semis, again, you can commit some capital for shorting them this week, commit some capital for keeping the positions over the next 30 to 60 days. Actually, here's the chart of Boeing that I was just mentioning. Let me review this real quick with you guys. So again, it's a nice bearish setup, right? So longer time frame, we're noticing this head and shoulders pattern, which is highly bearish. Here's your gap down number one. Here's your gap down number two. You see after that, the stock bounces 1, 2 tops right here. So ideally, we're wanting to come in and short it at about 390, 395 level right here. But at this point, it doesn't look like it's even going to get there. So we're expecting to move lower, about 30, 40 bucks. So levels of about 340, 350 would be a reasonable assumption that the stock could easily plummet there in the next week or 2 weeks. And here's the exciting part. Guys, this earnings week is, wow, look at this, guys. We're not going to get an earnings week filled with a ton of stocks like this each and every time. So this is week 3. It's going to be extra busy. Now, this morning is not. We only got a handful of stocks, and we're watching one trade we're considering is Spotify, and more on that in just a second. Some key companies are going to be announcing earnings over the next few days. We're seeing Google tonight after hours. We're seeing, as far as the healthcare stocks, we've got a few of them announcing this week, such as Molina Healthcare, MOH. For those of you that are new, any stock that has an exclamation point is a stock that we're likely to consider and take a trade on. Any stock that does not have an exclamation point by it, it actually tells you that we're watching it. We may be tuning in and observing the earnings call. But there's a ton of great, interesting plays here this week, guys. So be ready to trade. To go over the Spotify trade, we're actually considering Spotify 150 puts. Spotify trades very similarly to Netflix. On the initial pop, Netflix did sell off. It did rebound over the course of the following few days. So far, Spotify reaction to the earnings report is such that it is up about $7 at the moment. I'm recording this 7 in the morning. We've got Spotify moving higher from 138 all the way to 145. Now, we think it may still have some fire to go all the way to the 148, 149 level, and that would be the ultimate level to actually come in and short. Guys, again, for those that are new, you don't want to be shorting stocks at the bottom. You want to be shorting them on the bounces. And what level would we be targeting? Based off a longer time frame chart, the reversal, if the bears do come in, we may get a temporary reversal to the levels of 135, possibly 132. So if you're coming in at 148, 149, initially, if you, let's say, accumulate 2 contracts, you'd want to close one of them when it gets to this area of about 137, 138, and close the second contract between this area of 132 and 135. Let's review the market moves. Guys, on Friday, it was a move 4, and this is how it looked on the chart. The markets initially did open lower in relation to the previous day, but then we saw some activity coming in. Some bulls were actually starting to buy the dip. Important to notice that these market move forward, they could be tricky at times because once it bounces, it looks like it's hesitant to move higher. At one point, it looked like it created the double top right here, but then it created the triple bottom. And notice that the third part of the bottom, so you got bottom 1, bottom 2, bottom 3, it was happening in much lower volume. That signifies a reversal higher, not lower. So as you can see, as the market tries to fall, the volume is a little bit higher if you look in the volume bars. Second time it falls, the volume goes lower. And the third time, where it actually drops a little bit lower, there's almost no volume. Tells you that all the sellers that were wanting to sell are completely out, and that's when you see the market jump higher. And as you can see, this behavior on Friday was very repetitive because it did this one more time right here, bottom 1, bottom 2, bottom 3, and moved substantially higher. Now, the 2-day sequence is 12-4, which are both green moves, and as you can see, that resembles the behavior of institutional investors coming in and buying the dip once again. Now, oftentimes, when they're doing it on low volume, we're not going to see any significant big moves in the S&P or the Qs or anything like that. The market just kind of grinding its way higher. But oftentimes, when the market is forming the top, that actually happens when institutional investors, because you still see this huge red lines going intraday, not as much on Friday as we did the prior day, but this behavior right here could revisit the market today. So we could see some sharp sell-offs intraday going in right at the open, going in, at 11 o'clock, going in into the close. So until we see this behavior completely disappear, it tells us that institutions are coming in and they are taking profits at this level, which by itself will diminish the magnitude at which the market, number one, can move higher, and it completely prevent the market from going higher, number 2. So 5-day sequence is 4, 1, 6, 12, 4. Looks like the bulls are taking over the market again. But the question is, what we're observing pre-market today is possible move 11. So this is a snapshot of S&P futures trading between 3 and 6 a.m. today on Monday. And at one point, they tried to set a high of 29.4675. Now, guys, I really want you to pay close attention to this level because it would be very important observation to see if the market bounces to this level, if it's going to create a double top. Remember, we always talk about whatever S&P futures or NASDAQ futures are doing pre-market or after-market, those levels could be revisited during the regular trading session. So we are closely watching for this level of 29.46 that was established roughly about 4:20 a.m. If in the regular session we do get to this level, the next observation you want to make is, are we getting to that level on high volume or low volume? If we're getting to that level on very thin volume, the chances of reversal are going to be very significant. This is how the 5-day sequence looks on the chart. As you can see, the resemblance of behavior between a bullish move 4 and a bullish move forward here again. The sequence, as you can see, starts with a 4, ends with a 4. So we may get another day higher before a reversal. We may actually reverse right at the market open. So today is one of those days where we will get a confirmation whether the market is going to reconsider their initial reaction to the GDP report that we have seen on Friday. As the market had a very awkward reaction to the GDP report, we're actually noticing that the VIX is also rethinking its uptrend. Now, because it's just rethinking the uptrend and it's dropping for one day after consecutively moving higher for a few days, it does not make it a downtrend. It may be just pausing. What we're seeing pre-market so far is after trading above 13 a few times, and literally when the market was moving higher, the VIX did respond as it should, and it did drop. But this morning, again, it's creating the gap higher. The behavior of VIX have been such that it's been closing these gaps that it creates intraday. But the fact that it's actually opening them each and every time consecutively over the last 5-6 days is telling us that VIX is working in the reversal. VIX wants to go higher from here. So the next market move, the high probability of an 11, which is a reversal after market moves higher, and we're already seeing signs of that pre-market. A move 2, which if the market goes higher, and by 10:15 we will witness a reversal from there. Possibly a move 7, where the market is going to pull back, they're going to come in and they're going to buy the dip, which has been the predominant behavior so far. Now here are the key takeaways, guys. We are noticing that there are more sectors showing signs of running out of fumes, and the top information is continuing. We will continue to short the tops in those companies that show weaknesses and go higher on lower volume pre-market. Number 3, could the VIX actually rocket higher today and close tomorrow by 14? Because that would really confirm the uptrend in the VIX. And that would make shorting the tops much more profitable, because at that point we will see bigger moves to the downside, especially in certain sectors. We're going to pay very close attention to the behavior of Amazon today, because if it initially drops when the market opens, let's say to a level of 1940, and they come in and buy the dip, that tells you institutions are determined, no matter what, to take Amazon back to retest this 2050 level. And instead of shorting Amazon here, it would pay to wait until it does retest this level. Now, if we're seeing Amazon begins to sell off and reverse of these 1940, 1950 level, let's say it finishes today at 1920, 1930, it does confirm that investors not only reconsidering their reaction to the GDP number, but they are also reconsidering their reaction to the Amazon, which again is an outlier. Typically, Amazon would sell off on poor projections for the next few quarters. Again, focus on this number. The number of importance for today is 2946. If you're using Thinkorswim, all you gotta do is pull it up, /ES, and watch for this number, 2946.75 to be exact. Watch if we're breaking above that at some point intraday on strong volume, or if we're getting to that number, if the volume is actually greatly diminished. And that is the area where you want to come in and you want to buy some puts. Guys, with that said, get ready. I'm going to be posting some videos possibly tonight. Definitely a lengthier one tomorrow, because there's going to be a ton of opportunity trading the earnings plays over the next 4 days. So get ready, study the charts. You know the weekly plan of action. Let's make it happen. Do not commit a ton of capital today. Leave some room in your account to take advantage of these earnings plays over the next few days. Guys, let's make it happen. I'll see you tomorrow in the next video.